Welcome to Build a Business Worth Buying, the podcast where seasoned entrepreneurs, M&A experts, and world-class operators share behind-the-scenes stories of building, scaling, and selling remarkable businesses. I'm your host, Aaron Alpeter, and every week I sit down with people shaping the world of acquisitions, founders who've cashed out, buyers with bold strategies, and advisors who help make deals happen. This is not a podcast for beginners. It's for those who know the grind and want actionable insights to make their next big move. Get ready to take notes, rethink your strategy, and hear untold stories of what it takes to build a business worth buying. Hey everybody, welcome back to another episode of Build a Business Worth Buying. We've got a great one today. We have someone that I've really been looking forward to learning from, Jess Meher. Jess, welcome to the program.
Thank you for having me. This is going to be fun.
Yeah, it'll be good. So just a little bit about you. So Jess is a highly accomplished entrepreneur and investor with deep expertise in the e-commerce and SaaS ecosystems. She co-founded Wonderment, which is an innovative e-commerce tracking and customer experience platform, which was sold. She exited to Loop Returns, and she's currently at Loop as the SVP of marketing. So Jess has a really unique vantage point into the entrepreneurial life cycle, from idea all the way up to acquisition. And so today we're going to dive deep into Jess's experience and what it takes to scale, what it means to identify your exit window, and then just the integration with Loop Returns. So I'm really excited.
Yeah, fun. All right, what questions you got for me?
Well, let's just start. Let's kind of go back to the beginning with Wonderment. So what was the core hypothesis about customer behavior or the market that kind of informed why you decided to launch Wonderment?
It definitely was not a linear journey, which was what everyone thinks, that like, oh, you have this bright idea and then you build something and everyone loves it. That's not what happened. I can tell you a little bit about the founding journey of Wonderment. It really started in 2019 when I was leading marketing for another software company at the time, and my whole background had primarily been in SaaS. And I was getting frustrated as a consumer, which is like, I love to shop. And I love to build relationships with brands and with products and use products, but I was getting frustrated in the way that I felt like I was being treated as a consumer, which is my inbox was full of spam and me getting like blasted with messages every day about like, buy more. And did you forget something in your cart? I'm like, no, I didn't forget something. I actually left for a reason. And because I had this background in SaaS, and particularly working for a company called HubSpot, which you might know of, which was all about like this inbound marketing movement and creating marketing that's valuable and educational, I didn't understand like why that didn't exist, particularly in e-commerce and in consumer tech. And it was just kind of driving me crazy that I'm like, I just have to go figure this out. So I actually left my job to go explore opportunities to build something. I'd always been entrepreneurial, and I'm like, now's the time I want to start a company. I just don't know what it is yet, and I have to go figure it out because I couldn't sleep at night. And it took me a few months of talking with different people, exploring the landscape. And actually at the time, the original idea and genesis for Wonderment, this is before we actually founded the company, was a consumer app. So I was exploring like consumer technologies about how to like create better shopping experiences for consumers. And I kept hitting roadblocks because my background is not in consumer, it's in B2B. So I felt like maybe it was a little bit of a confidence issue too, that I had the capability to even build a product in that space. But around late 2019, I reconnected with a former colleague of mine at HubSpot, whose name is Brian Whaley. He had spent a few years, one of the early employees at Klaviyo, which became a rocket ship in the e-commerce space. And he also left around the same time to go start a company in e-commerce. So I'm like, you want to start a company? I want to start a company, same space. Like, hey, we should chat. So we did the, early co-founder dating thing, because when you're looking to start a company with somebody, it's very different than working as a colleague at an established company. So we needed to make sure that, even though we were both coming into the conversation not having a specific product we wanted to build, but making sure that our values were aligned in terms of what problems we wanted to solve and what type of company that we wanted to build. And also, like, did we have fun working together again? And yes, we did. So we decided to start a company, again, not knowing what the product was going to be. We started building some things on top of Shopify just to learn more about the ecosystem and getting familiar with the technology and the APIs. And then 2020, and if you remember 2020, COVID happens. And what COVID really exposed was the fragility around the supply chain. And a lot of the brands we were speaking with were really having a lot of difficulty around visibility around how those supply chain issues were impacting the customer experience. And we realized how important that was. And through just really listening to customers and exploring the pain, we discovered that they just didn't have visibility that they needed in the post-purchase experience. And then if they did, how do they take action on that insight, and how do they automate those experiences? So the first early MVP of Wonderment was what we called a "Where is my order tracker?", which was, it very simply flagged orders that were stuck in transit, that were like sitting on a truck somewhere or sitting, lost somewhere in the ether, and were not going to get delivered to customers on time. And
And
believe it or
you were
not, that
flagging
didn't
it to
exist.
were you flagging it to the brand or the customer?
So we were first flagging it to the brand. So we
Okay.
decided to build a B2B app connected with Shopify, and we first gave brands that insight. So we give them like a dashboard that said, like, here are all the customers who are probably going to be very mad at you because they're not going to get their order in time. And then we built automation on top of that that let the brands proactively communicate that
Mm.
status of the order to the customer. Because sometimes, like for me, again, going back to my very annoyed experience, there were so many opportunities where I bought from brands and I'm like, where is my order? Or like, I think it's stuck, or has it shipped yet? And why should I be the one to have to reach out to the brand? Why can't they communicate with me directly? So that was our premise. But even to take a step back, the reason that we decided to build in that space is we had a hypothesis that the acquisition side of the equation, particularly for e-commerce, was really well saturated, but retention wasn't. We felt that retention was more of a blue ocean, and there was a lot of opportunity for innovation in that space. So we went into that thesis of like, we know retention is going to become more important for brands, and there hasn't been a lot of imagination around what that could look like. It just so happened that supply chain happened to be our wedge
Yeah.
into that thesis, but that's how Wonderment came to be.
Interesting. At what point did you realize that you didn't have a product, you had a company? At what point did you feel like you were, I wouldn't say the exit velocity, maybe before then, but you found something like, hey, this is actually here. We're actually making money. We're making progress on covering our costs. And like, this actually feels like something we could build. We no longer have to go keep searching because we've found our niche.
Yeah. Well, in the early days, we didn't care so much about that. It was just like solve problems and build shit and like figure it out later. And when we launched Wonderment, we got 5 paying customers, then we got 10, then we got 50. So we knew we had some early signals of product market fit. When we launched a product in that space, we actually didn't realize there was an established category around like post-purchase experience and order tracking. So there were already signals that there were well-established companies in that market, and that we can build the next generation of that. So I think what we realized is like, hey, we had this initial idea and feature. What does a full like platform look like? How do we think about consolidating more of the market and owning more of that experience? So I think it was really more of like, we felt like we had a company and a vision that was starting to become bigger than what we had, which is like, how do we create better customer experiences across the e-commerce tech stack, like returns and other things. And that's when we knew that we felt like we had something, really bigger in front of us.
Yeah, that's great. I mean, post-purchase, customer service, these are super well-funded, well-defined areas. Did you feel any hesitancy diving into such a difficult area, or was your perspective that, hey, we're doing something that's so new that yeah, there are people that are doing this, but they've only just qualified the market for us, and we've got a winning proposition here?
If I had known how difficult managing shipping data would be, I probably wouldn't have done it. But I think being naive gave us the upper edge. Like, I wasn't afraid, and I wanted to build something meaningful. And yes, I did look at like how big of a TAM the customer experience market is. And so that really excited me. But, I wasn't shy about going after hard problems because we're just learning and building and going along the way.
What were some of those difficulties you ran into, either around shipping data or just building the business in general?
Yeah, we thought it would be really easy to just plug into Shopify and we can just use Shopify's data. And so Shopify actually has some very generous APIs that they built for app developers where you can get a lot of data for free, essentially. So we initially used Shopify's like what they call their fulfillment API, which gave us insight to some tracking data and some shipping data, we realized that it wasn't high quality or complete enough to the type of premium experience brands wanted to deliver to customers. So we knew that we needed to do a better job. And one of our differentiators of Wonderment was really in the quality of our data, where most apps would just plug into one service provider, spit out the data, and not care about what comes out on the other end. We do a lot of analysis, aggregation, normalizing the data, ML on top of the data to like predict when things are happening and output cleaner data on the other end. Because if you think about it, carriers are not tech companies, and they all have
No,
different
they're not.
systems of the way that they tag things, name things. And so you have to unify that data to a very consistent experience for the brand and for the consumer. The way I talk about Wonderman is we're almost like a data company, really, because that's like a lot of the special sauce that's under the hood that we've had to really work on. And again, I didn't know that going into it, but we had to figure it out.
What would you have done differently if you had known that you were building a data company?
I would have we intentionally built the product to be very tightly coupled with Shopify because we wanted it to be a very good experience for Shopify merchants. I think we coupled it too much and too close. And I would have thought about architecting the system to be more flexible for other types of storefronts and other type of commerce platforms. At the time, I think it was the right decision because it enabled us to move fast. And I do want to avoid like over optimizing for scale too soon. But I think thinking about like, we probably would have architected the system a little bit differently or in a more flexible capacity. And again, I'm the non-engineer, so I'm not going to explain it properly other than just thinking about, hey, there's actually a whole other world of brands out there that are not on Shopify, and how do we support them as well?
Yeah, makes sense. So you've kind of walked us through. You had the idea, you got started, you pivoted. This thing called COVID happens. We're at 2020, and then there's really this 4-year sprint where you guys are growing, learning, changing, and then you end up exiting to Loop at the end of 2024. Talk to me about some of those big milestones that happened in those 4 years as you were figuring things out. How did you know that things were going well, not going well? How did you know you were getting close to your exit window?
Well, we didn't set out to get acquired in the first place. Brian and I and Wes, our third co-founder, come from companies like HubSpot, Klaviyo, Drizzly, Wayfair, where Drizzly had an exit, but like we come from places where we are been trained to build big and meaningful businesses that like even outlast us as founders. And so that wasn't our initial intent. That's why we raised ventures, because like we didn't want to like have a quick exit. And because of that, I think it fundamentally put us in a position to build a business that was a healthy business for the long term and not trying to optimize for a short-term sale. So I will say that right off the bat. I think some milestones that we saw along the way, which was we were consistently growing. We were starting to win more deals and bigger deals, especially against incumbents and some of the established players in the space. We were starting to win a lot of the up and coming brands in addition to the established brands. So like the new hot companies that were like investing in new technology and things like that. And we were getting a lot of great positive reviews and positive feedback because again, like we are a business, we need to make money, it needs to be economical, but like that moment when a customer's like, I love this and I can't imagine not having this in my life. Like to me, those are the signals that are really meaningful, especially in the early days. So we knew we had something. One of the reasons that we decided to pursue a strategic partnership with another company is a few things really started to happen. And I would say in the last 4 years, tech in general has seen so much change. You had like the COVID drop, then you had the acceleration in 2021, and then you had another recession and dip again in 2022. And like, things were kind of messy and all over the place. But we saw, because of the state of the economy, that consolidation in e-commerce was becoming more important to brands. Brands didn't want to have to buy all of these tools. And what we found was the typical brand was typically installing 25 to 30 different apps.
Wow.
Like just to solve one experience. That's fragmented for the consumer. It's like costly for the brand, not just like buying new tech, but even like just managing all of the different tech stack. And so we saw consolidation was happening. And what Wonderment did was a moment in time in the purchase journey. Why should we exist as a standalone? I think we would be better served as a company for scale and serving our customers better if we were actually part of a bigger platform. And so part of that was like, we looked at returns, we looked at some pre-purchase experiences. And that's when we realized, hey, I think Wonderment can actually grow better and faster and serve our customers more if we're not a standalone company. And so let's explore that. And we did explore, maybe building commercial partnerships with some of these companies and still staying independent. We talked about going all in. We looked at all of the options and we just felt like joining forces was the best outcome for everyone. And some of the things that were really important to us for criteria on an acquisition was the founding team wanted to stay. We wanted to keep building. We weren't done yet. We weren't ready to throw in the towel. We wanted to continue to serve our customers. We wanted to continue to grow the platform. We still believed in the vision. Where could we go that would give us the foundation to continue to build and continue to grow? And Loop was all of those things to us, which is why we decided to partner with them.
Yeah, that's you touched on so many things there, and I want to go back to one kind of core element that I've talked about a long time, which is that businesses are bought, they're not sold, right? If you are trying to say, "Hey, I built this thing, someone come buy it," you typically, you're going to get a lower valuation if you do manage to sell it. And so I kind of want to drill down on that a little bit. Like, what metrics did you guys focus on? What sorts of things did you do or not do in those first 4 years that made yourself have a healthy business that maybe other people don't do?
Yeah, we were a little contrary to the typical VC funded mentality, which is you go raise a new series and a new round of funding every like 12 to 18 months. We never believed that. We only raised a seed round and we stopped there. We kept our team super lean. I think we maxed out at 17 people. And we had plans to grow headcount more, but it never felt right to us. And so, like, one of the other pieces of advice is like, oh, you only need to have 6 to 8 months of runway, left before you go raise the next round. I never felt comfortable with that. Anything less than 12 months freaked me the hell out. So we always had a rolling at like minimum 12 months, but on average 18 to 24 months of runway and a path to profitability. If, most companies, especially in acquisitions, don't want to absorb risk. Like VCs are more risk tolerant because they're investing in future vision, but an acquirer doesn't want to acquire a bad balance sheet. Like they usually don't. It depends on the situation, but what made it good for us is we had healthy growth. We had a path to profitability. We had this was not a fire sale. We did not have to get acquired. We did it because it was the right strategic reason. And we had a great team. We brought over a really amazing team, founder energy, builders. Bringing over the customers and the revenue we had was nice too, but like compared to Loop's revenue, it's not like not extreme, but it was nice. But I think it's really around like there's just the stars aligning about what's important to us and what's important to Loop. But I think a lot of how we ran the company and how we focus on having good, healthy unit economics from day one was something that I think carried us through those 4 years.
Yeah. No, I love what you're saying there, because you're basically saying that by doing quote unquote all the right things, you gave yourself this optionality. And as you were going through your story, it wasn't as if you were burning. You had an unhealthy team, unhealthy culture, and then all of a sudden you said, "All right, let's fix it because we think we might want to sell." You were really kind of there all along. And there is a point in a business where you are too small or too big to be acquired at a certain level. And so I guess you taught me through that period where you guys were looking at your different options, and how did you decide that, what, we actually do have something that is the right size. It's not too big. It's not too small, where we could partner up with a company like Loop.
We, I think at the time of the acquisition, we had about 14 or 15 employees. And this was also at a time where companies like weren't and still aren't hiring a lot of headcount. And we also didn't want to go into a company, like a big company, where maybe we would join forces, but like we would become invisible, right? And we would just be like another cog in the wheel. So it was really important that we could bring over the bulk of our staff, and that the skill sets that we brought is what the acquiring company like also wanted, and that it was a good culture fit. And so I think what's really also amazing about Loop that really surprised me is toward the end of the acquisition process, we got invited to a onsite with the leadership team, and they spent a whole half day on the agenda talking about cultural integration, which was how do we help support Wonderment's team, but also how do we bring more of Wonderment's DNA into Loop, and how do we learn more from them as well. So you have a 200-person company saying, how do we learn more from a 17-person startup, which is like really amazing, and I think really signifies how important it was to Loop, and how important people and culture and bringing in like the right kind of DNA is important for both of us.
Yeah, that is such a great example. I definitely want to dig back into that a little bit more. Kind of last question I have as you were preparing for the exit is, you guys were working, you had, control of your burn, you had a good operating business. Was there anything that you changed as soon as you decided, you know what, yeah, we do want to pursue an exit? Was there something that you said, hey, we're not going to work on that initiative, or we're going to not spend as much because we're maybe either trying to dress ourselves up a little bit, or either just from a bandwidth perspective, you knew that you were dating all these other companies, you just couldn't have the headspace down to work on a new feature or things like that?
I think the only thing we stopped doing was hiring, but we had already done that ahead of the acquisition. Like we wanted to make sure that we didn't add more bloat
Yeah.
to the team. There might have been also a couple decisions on the tech side that we were going to think about making some big investments on that we decided not to from like an infrastructure standpoint. Um, but other than that, it was like, I think the challenging thing was how do we explore an acquisition while also running the business at the same time?
It's two full-time jobs.
It's two full-time jobs. It was, I'm not gonna lie, like very stressful. Um, I think the most stressful thing was not being able to tell the team for a long time because deals can fall through at any moment. And I also didn't want to distract, the team from keep staying focused. That was really hard because I'm a very transparent person and I like to explain everything that's going on in the business. But I'm also superstitious, so I was like afraid to mention it too soon. I think that was probably the hardest part because the team is like, where is Jess traveling to? Like, why is she going to New York all the time? And all these things. Yeah, that was actually the hard part for
How
me.
did you navigate that? I mean, did you tell a white lie, or just say like, hey, there's some things I can't tell you in my role, and I can't tell you?
Well, actually, I did tell them the truth. We were meeting with partners and talking about strategic investments, and we had explored commercial relationships with these companies already. And so, yes, did the conversations change to a little bit more than that? But like we would tell them who we were meeting with and why. And then also around this time, VCs were interested in us, so we did have a plan B to raise a Series A if we wanted to, and we were having those conversations. But deep down inside, we knew that that's not the path we really wanted to take.
Yeah. What was the rationale for not taking on more venture money? 'Cause that seems to be like the easiest thing that people would say is like, oh yeah, you get some secondary out, and you get to have a big headline, and you keep building your empire, et cetera, et cetera. Why was it in your mind you said, even if we know we're going to sell, right now is the time we need to sell?
I just don't think being on that treadmill excites me, like personally, and I've seen it. To me, that's not success. And I think a lot of people love the headline in the news and saying this is a great milestone, I can hire more people. I don't know, maybe I was like ahead of the time thinking like small, nimble teams and profitability was the sexy way to go about it. But also, I think candidly, I wasn't confident in that we had what I would consider a billion-dollar venture-backed business. I think we had a good, healthy business, but as a standalone, I wasn't confident that we had this like billion-dollar potential unless we did want to go raise money and pivot the company into something different. And unless I felt like I had that confidence, I wouldn't want to take any investors' money. So that was my stance.
Yeah, I think that's really smart because I think a lot of people will raise money and then figure out what exit valuation needs to be afterward. And I know of a couple of companies that come to mind that, they raised 50 million bucks, 80 million bucks, and their business probably could sell for two or 300 today, but the investors can't allow that to go through because that's a failure, right? And so it's almost
Yeah.
like this idea of, hey, if you raise 50 million bucks, you better sell for 500 million. And so did you have like that, was that something that came intuitively to you, or were you thinking about this like, okay, we could probably build something that, maybe it's good, it exits for, make up a number here, $100 million, and so the most that we can raise is this amount? Or was it just this idea that you didn't want to give up that control or that equity, and you wanted to kind of control your outcome and exit on your terms when and where you and your co-founders felt right?
Definitely more of the latter. I love investors and I love my investors, but I didn't feel like my job was to like make my investors money, even though like that's what I want as an outcome. But also like the outcome is I want liquidity for my employees.
Hmm.
And if it's for me and my founders too, great. But early employees take a lot of risk in joining an early stage company. And to me, I think a lot about that. Part of that sentiment comes from having worked at companies that had a good outcome and some that didn't. Like I've worked for companies where I paid a lot of money to exercise my options and it didn't work out. And that's like very costly and expensive. Or the company did have an exit, but all of the liquidation preferences like go to investors and the employees are left with like little to nothing. And I just like never felt good like that. I wanted to reduce the chances that that would happen for my team. And I think that comes a lot with not chasing valuation and instead chasing like healthy unit economics. And I think I got a lot of that from my time at HubSpot. I think HubSpot was always about how do we build a good business and a big business, and that both matter. But I think seeing both the good experiences, the not so good experiences, really helped inform the way that I feel about growing companies today.
No, I love that. Um, let's kind of move into the due diligence part of the life cycle here. So, is you're going through you're dating these other companies. Ultimately, you guys are settling in on Loop. What was it about your business that Loop found really valuable? You mentioned some of the things about the team and the tech and things like that, but what was it from their perspective? And maybe more being on that side, where they're like, "Hey, yeah, these things were great, but this was the thing where like, oh my gosh, we have to have this one thing."
In Loop's case, and this is very specific to them, but our product and their product is typically a bundled solution from other competitors. And so just by combining the two technologies, it gives Loop the ability to like go like sell more product essentially to their customer base, like on day one. There's not, we have to wait and build it for 6 to 12 months. We can immediately like,
It's an easy bolt on.
continue selling. It's an easy bolt on. Loop had tried building our product and realized how challenging it is to manage shipping data. And they're like, great, we can fast track this, just acquiring a company. For me personally, like Loop was looking for some marketing talent. That's my background. It's what I love doing. Still love being a founder, by the way. And I still have a lot of opportunities where I'm doing that here at Loop. So I think it's both like a talent thing, a technology thing, and we serve the same ICP of customer for the most part. Wonderment also gives Loop the ability to actually expand our TAM of ICP because typically returns is not a problem for every kind of company. If you think about food and beverage, you don't necessarily return a food and beverage product. They say just keep it. So the process and the operations is very different for those type of brands, which we serve. We as in Wonderment that we had as customers. And so it also opens up Loop's TAM to serving more types of e-commerce brands.
Got it. As you were going through the due diligence process, I guess talk me through, like, was this a 6 week thing? Was it a 6 month thing? Like, how did you go from, hey, we think we like these guys, to, all right, they're really checking us out, we're really checking them out? What was that process like?
We had been partners with Loop for a number of years. So I think that's the great thing. And one of the things I would advise any founder is even if you have no plans to get acquired, like start the process of building relationships with strategics, like 12 months, 18 months, 2 to 3 years ahead of like where you think you might be. That early foundation of the relationship we built with the CEO, with the founding team, with a lot of the team there at Loop, I think was very important and critical. And we had already had established conversations around potential commercial partnerships. We just never could get to like a definitive, like, here's what's good for Loop and here's what's good for Wonderment as a separate company. So I think when Wonderment decided like, hey, we're going to go down the path of acquisition, we're going to run a tight process because we don't want this to extend more than 6 months. we want to either focus on the business or having an exit and like, get back to work if that's not what happens. We didn't want it to drag on. So I think once we made that decision, it was probably like a 4-month process. And we had spoken with other companies. We went through that whole thing. We took a long time to make a decision before we signed an LOI because we wanted to make sure it was the right decision. Because once you do that, you're locked into exclusivity and like there's really no other option. So we took a long time to get to that point. But then once we did, I think we moved pretty quickly. I think we closed the acquisition within 2 months. It was a lot of legal paperwork at that point, and I want to pretend like it's a blur. But it was, so it's both long and fast at the
Yeah.
same time is how I'd answer that.
Yeah. The days are long, but the weeks are fast.
Yes.
So
Yes.
I'm just interested to hear from your perspective because you were running it sounds like a somewhat of a competitive process. What were some of the factors that moved you over to Loop, right? Like versus some of the other things. Was it valuation? Was it really the team and the culture? Was it kind of what they wanted to do with the business? Talk to me about kind of how you evaluate some of the other opportunities that you had.
Yeah, the offer itself was important, but not the most important because you can get a really great offer and then the company acquires you and then sunsets the product, or like all the employees hate it and they want to leave. Like we wanted to go work somewhere else and keep building, and we wanted to join a team that we really like enjoyed working with. And so Hannah, who's the CEO of Loop, is an amazing human and somebody that I aspired to be when I grew up. And so I wanted to go somewhere where I could learn from that person and those people and have fun and keep building. So I think that was number one. Number two was the offer and the outcome did have to be meaningful enough for my team and my investors because I didn't, reputation is
Yeah.
important. And I wanted to do right by them. Was it the $1 billion exit we all hoped for? No, but like we still have, meaningful equity in the business. It could turn into more. I'm very committed to making sure that this is a success. So those are, just a few of the factors that were important to us. And by the way, me and my co-founders, we sat down and we had a conversation around this. Like, what is important to each and every one of you? Like, do you want to keep working? Do you want to go do something else? Like, are you sick of this? Do you want to keep invested? We were all on the same page, which I'm like very thankful for. And if we weren't, that would have been okay too. But at least we were super, super aligned with what the three of us, what the outcome was that was important to all of us.
Yeah, and I want to talk about that outcome because one of the things that's really unique is that you guys decided to move on and to go into Loop and to take roles there. And it's not uncommon for after a deal happens, there's some sort of earnout or someone sticks around for 6 months, for a year. But it sounds like you guys are pretty happy with where things are with Loop and you see yourself being there for a long time. So talk to me about like what was that decision process like where you said, you know what, I really would prefer to roll equity in and kind of see if I can't get a smaller piece of a bigger pie as opposed to just cashing out and going to do something different.
Yeah. I mean, I'm not gonna lie. If I had walked away with like $1 billion, I'd probably be sitting on a beach right now.
Sure.
Um, this is my personal opinion, and my co-founders might have a different take, a different spin in a different way. But because my background is in marketing, I wanted to go somewhere where I felt like I could create the best work of my career. And I saw Loop as an opportunity to do that. And I think they're going through a really exciting next phase of the business. And we have something really exciting in terms of future vision. And every marketer, that's like every marketer's dream, which is big vision, autonomy to go build something really amazing, build a great brand. What's not to love about that? Like it's what I enjoy. And I'm a founder, I'm a builder, I'm a creator. I love to craft, amazing experiences. And I felt like I could do that at Loop. Why would I go anywhere else? So it's been a lot of fun so far.
Yeah. How did you end up telling team?
Telling our team,
Yeah.
oh man, I remember being very nervous. We are a fully remote company, so it was over Zoom. And so me, Brian, and Wes all kind of, gave here's what's happening. And I think we went right into it like, hey guys, just so you know, we're getting acquired by Loop. and here's what that means for you and why I'm excited about it. And by the way, you're all, getting job offers to join Loop, and I hope you're excited to take it. And I was very nervous about it, but I think the feedback was good. I don't know, it was both exciting and nervous time, but amazing outcome. So
Yeah. Did most of the team members end up taking roles at Loop, or did some people kind of take that opportunity to do something
most people did, not everyone, which is like to be expected. But I'm very happy that the early members of the team I still get to work with and see every day.
Yeah. Now, you shared this great story a few minutes ago about kind of how Loop spent a half day talking about cultural integration and those sorts of things. What was the integration process like outside of that meeting, which clearly set the tone for how they wanted to go about doing it?
How did that go about? I think what was interesting and challenging was we were coming into the organization with this, like, we wanted to keep the machine of Wonderment running, while we're also getting used to our new jobs.
Yeah.
Yeah, and that wasn't easy. And like, I think it's still like we're still figuring out like, how do we get the Loop team trained on Wonderment as quickly as possible? Because like we were a small team, and now if you think about going from supporting 1,000 customers to potentially like 5,000 customers, overnight, like I think the thing that we really paid more attention to is like, how do we continue to support our customers in the best way possible? How do we get the Loop team trained on our technology? How does the Wonderment team start to learn more about Loop technology, the processes, the operating rhythms, like all of those great things. So I think we had a pretty good process of like getting up to speed quickly, and Loop has some really great training for like any new employee anyway. So we really just adapted that process.
Yeah, would you? I mean, it's still relatively early days in the acquisition. It's been 6, 7 months at this point. Do you guys feel the integration is done, or are you, 10% of the way through? Like, talk to me about how you're thinking about that journey. When will it be done?
Yeah, I don't know if there is a done. So there's like different milestones that we have, which is, can our customers log into both systems with like one unified experience, right? So even if the product still remains separate, is it a good experience for the customer? We've already done that. That's great. Now we have this vision, which is, in isolation, the products are great, but how do we create this 1 + 1 = 3 so that current customers get compounding value by using both solutions together and the data is talking to each other? So like that's the next thing that's coming out that we're going to be announcing in a couple of weeks. I think once we have that, even if the systems aren't completely on the same tech stack, like to me, that's where the magic is. And yeah, that we're right on the horizon line of that.
Yeah. There's this framework that we've used a lot with folks as they are approaching integrations or going through it. And I'm just curious to see how much this resonates with what you guys are doing at Loop. So there's basically three phases to every integration. The first one is you have to get on the same team. That means it's like, Google versus Microsoft, Teams versus Slack, common email addresses, things like that. Then the second phase is making sure you start speaking the same language. So the acronyms, the systems, the values, those sorts of things. And the third piece is having a shared win, something that either side wouldn't have been able to do on their own. It sounds like you're alluding to is maybe this feature that's going to be released in a couple of weeks. Is that a rough framework that you guys have used as well, or is there something that you would change or add to that?
When we were going through the acquisition process, I give a lot of credit to Loop's people team, because they did an assessment of like, here's all Loop's, tech stack and the way we operate. Here's the way that Wonderment does it. Here's our vacation policy. Here's their vacation policy. Here's their benefits. Here's ours, to really compare and see where the differences were. The good news is that there wasn't a lot of differences,
Mm.
and I think the way, because we're both remote first companies, so I think the way we communicated wasn't super challenging. The technologies we were using wasn't super challenging. Wonderment team now has access to more resources now, which is actually like what we're really excited about. Like, hey, we have better benefits. We have more people. For example, at Wonderment, we didn't have HR. We didn't have a people team. That was me. Bad decision. Like, we actually have people we can work with and talk to now. And so I think it's just like any new company you join, who do you talk to? Where do you go? Where do I find information? But there wasn't too much significant differences in like the way we worked.
Yeah, what was the cross-pollination like between the Wonderment team and the Loop team? Is it still pretty rigid, if like there's the Wonderment folks and the Loop folks, or have people started to move across the organizations?
I'd say both. Our go-to-market teams are more integrated. The engineers are still really focused on serving the core Wonderment platform because we want to make sure that we
Yeah.
continue to build and innovate on that. And actually, we have more people from the Loop team now on the Wonderment product, so our team has only grown. But we're also like very well integrated and working very cross-functional with the rest of the group.
Yeah. What about you personally? I mean, it is not a small thing to go from a founder to being a leader in another company. What was there any sort of psychological change, or was there maybe a weight off your shoulders where it's like, okay, you know, I'm not asked to be one of the main people at Wonderman anymore. I'm asked to do this other job, and that's okay.
I've been asked that before, and surprisingly, or maybe not, I don't feel like there's a weight off my shoulders because I feel still like there's a lot of responsibility for me to do, and I'm not done yet. I think when you carry this different weight being a founder, which is you're held accountable to investors, to your employees, you're responsible for like their payroll. And even though I don't have like those particular pressures, I still am accountable to the CEO, to our board, to my employees. And so I think it's just like a new kind of pressure, but I live off pressure. Like that's what founders are good at. Um, and I think we operate better. I think most of us operate better that way. And yeah, it definitely has taken me a psychological shift in the sense that this isn't my baby anymore. And when you're not this, when you're the CEO, all the decisions end up like boiling up to you at some point, and you have to be very how do I want to say this? You're making decisions across the org in a very different way. And for me, it's learning at what place do I have in a bigger organization, but where can I continue to do that in a way that's still important and meaningful? And I was kind of like adjusting to that, which is like, should I should I take a step back? Should I actually not be afraid to step on toes? And the good news is like I think Loop is very much like don't be afraid to step on toes. Like be yourself. This is why you're here. Um, and so I don't know, it took a little bit of an adjustment just to like reacclimate myself and my place in the world, which is not unnormal from a founder, getting acquired and joining a new company.
Yeah, absolutely. I've seen it. Sometimes it doesn't work well, right? So sometimes there's a bit of seller's remorse, and there's folks where people will, kind of question and wish that they had the control, and maybe the paycheck is nice or things like that. I guess, how did you go about just preparing yourself for that exit and just preparing? And it's one thing to say it's not my baby anymore, but you're always the founder of Wonderment, even if your job title has changed. And so, like, how do you prepare and say, yep, I am actually okay with this, I'm not just going along with it?
I don't think I prepared myself at all. I don't know, maybe I should have. I mean, I've heard of all of those horror stories, and they're more often than not. And I don't know, I felt that because of I felt like we were making decisions for the right reason, and we put a lot of thought into it. And I think because we went into that as a unified front and saying what's important to us in this transaction and in this relationship, I think that was preparation
Mm,
going into making sure we're setting ourselves up for long-term success.
yeah, absolutely. So now that you're in Loop, I mean, there's always this expectation when you join another company is you are delaying a payout today in hopes of a bigger payout down the road, right? And so when you were going through this, and obviously can't share anything you can't share, but when they were talking about, okay, here's the exit strategy for Loop, they want to be acquired themselves, they want to IPO, they're just planning on staying private forever. How much of those discussions went into your conversations in the due diligence piece and your decision to want to stay on full time?
I mean, any company I would join, I hoped for some kind of liquidity event at some point, in whatever flavor that is. I am not stuck to Enora's loop like a certain outcome or an exit outcome. I think again, we're both focused on building big and meaningful businesses, healthy businesses, profitable businesses. When you do that, I do believe good things come from that. And that gives us optionality to say, like, hey, maybe we can do like a secondary, or maybe we can do profit sharing, Maybe it's an IPO. Like it could be so many different things, but because you've built a great foundation from the beginning, it actually gives you choices that are not just good for the business, but good for employees. And because we both had the same point of view on that, like that's what I was excited about, less on the specific, like we're, attempting to exit within 3 years. It's like actually like, here are the things that we need to do first and like have fun along the way. And yeah,
Let's see what
that's the
happens.
way to go about it.
Yeah.
Let's see, like, yeah. But like, we all want to like retire early and go sit on the beach, or at least I do. So, but at the end of the day, we want to do it the right way.
Yeah, that makes sense. And so kind of to come full circle, I mean, you've had this great experience in a short period of time where you had the idea, you chased it, you jumped on it, it grew, you're able to exit and kind of figure out things. What sorts of things are you doing now at Loop that ensure that Loop is a business worth buying at some point in the future?
I don't think there's like anything I feel like we've changed or changing about the way we operate other than, continuing to build a product that serves customer pain in the same way we did in the early days of Wonderment, where we become essential to the way that the companies operate, that there's a lot of customer love and empathy for what we're building. I think if you do that, like, and I've heard this situation happen where companies are maybe growing really fast and they look really attractive as an acquisition target. But then when you really dig under the hood, you kind of realize customers hate the product. They're churning. Like some parts of the business like aren't actually great. It's what you don't see that I think is also really equally important. And I say like focus on that, like focus on being essential and building something that's like really meaningful and valuable.
I love it. If you had to share one or two pieces of advice to a founder who was 12 to 18 months away from a potential exit, what would you say?
Oh, start talking to strategics like yesterday. Just start building relationships, get to know what's important to them. There was a book that was recommended to us on mergers and acquisitions that really helped us prepare for these conversations because it is night and day of pitching a VC and
Hmm.
like what a VC cares about versus what you're talking about to acquire, because most most startups, most companies go in and say, here's why I'm so shiny and amazing, and here's why you should buy us, versus here's what's important to you and your strategy and your vision. And you can't get there unless you would partner with somebody like us.
Mm.
So it's about positioning it in a very different way. But I highly recommend every founder read this book, even if you're not planning for an acquisition, because those early conversations, you never know where those will lead you in the future.
Well, yeah, absolutely. I mean, it's a different type of selling, right? With the VC, you're selling the sizzle and the pop, and hopefully that things will be marked up. But you're right. I love that framing of, hey, acquirer, this is your goal. This is what you stated. This is what you're trying to do. You can't get there without me, and so like, let's talk. And so I think, yeah,
Yeah.
having that framing and what it does too is it pushes you to really understand who your acquirers should be, right? And it helps you understand what your business to look like in order to be something that's interesting.
Yes. Yeah. And it sounds obvious in like retrospect, but I don't know. When I was reading the book, I'm like, oh, yeah, like, of course.
Yeah.
I'm doing this totally backwards. And it was a helpful framework.
Well, good. Well, Jess, this has been an amazing episode. Thank you so much for joining. We've got two questions that we always ask our guests, and so the first one is, what's the best example of a moat you've seen a business build?
You know, I kind of believe there's no such thing as moats anymore.
Okay, go on. Yeah, tell me that.
I think just like with the rise of AI, like anything could be copied.
Mm,
The one thing though that is hard to copy is brand. And so if you build a brand that's like really core to like your mission and your purpose in life, it's really hard for anyone to copy you. And so like that is a good moat. Um, I don't know if that's a cop out answer, but
no,
I
that's a
just
good
find
answer.
like, yeah, and there's that book, what is it, The Seven Powers,
Hmm.
that talks a lot about this. So I think there's like still foundational things that are true around how do you build moats. But I think building technical moats is becoming more and more challenging. Like you have to, be an extreme breakout for that to work. But it's really hard to copy brand. So I consider that to be a good one.
That's good. And then if you had to start over today, just knowing what you know now, how would you go about building a business worth buying?
I think a mistake that I made was when you're building a new business, you typically see things that most people don't. And when that happens, you're going to get a lot of pushback and you're going to have a lot of people tell you you're wrong. And there's so many other various excuses, which can feel like defeating and feel like if you're on the right direction. I think I probably would have stuck to this is the future I believe in, and this must happen, and I must be the one to move this future forward because nobody else sees this but me. And I felt like I kept retracting back and forth from that a little bit because, things get hard and you get naysayers. I think if I were going to start again, I would think very hard about the future I want to exist and like running full steam ahead into that and like doing whatever it takes to get there.
Love it. Yeah, I think there's an element here of being able to plant your flag and say, this is what I believe, this is what we're going to do. And then I think, based on what you shared earlier, you're probably putting some sort of cap on that or some timetable where you'd say, I'm going to give this 2 years, right? And if I can't make this happen, then maybe I'll go do something different, or maybe that's when I pivot.
Yeah. And I know there's like this whole debate between like denial and like ambition and like how do you balance those things? Like, yeah, you have to listen to your customers and you have to be serving, trying to solve real painful problems. But there were like times in the early days where I'm like, oh, I believe that e-commerce companies should be serving their customers in a different way. And I always got an excuse why they weren't and an excuse why that shouldn't happen. When I'm like, well, why shouldn't it? And if, we believe this is important, they just don't have the right either tools or framework or mindset to have that, to understand and see things the same way I did. So, yeah, I think maybe at some point you should think about both having a strong vision as well as a strong business model. Like you have to have both. Like you can have a great product and a great vision, but at some point it's got to make money and it's got to be self-sustainable. So like that's important too. But yeah, I think it's about balancing all those things.
Love it. Well, Jess, this is great. For the listeners who want to learn more about Wonderment or Loop Returns, what's the best way to do that?
Yeah, loopreturns.com. I'm on LinkedIn. I'm on Twitter, although I don't really, X. I don't really use that as much anymore because I think that platform's gone downhill. But I'm on LinkedIn, so please connect.
Awesome. Well, thank you all for listening. If you like the show, please rate, subscribe, all those things that you're supposed to do. And we'll be back next time with an excellent guest on Build a Business Worth Buying. Thanks for joining me on Build a Business Worth Buying, brought to you by ISBA Consulting. I hope today's conversation gave you real insights into scaling smarter, selling better, and thinking like a strategic operator. If you found value in this episode, make sure to subscribe, leave a review, and share it with someone who's building their own sellable business. Until next time, remember, the real win isn't just building a business, it's building one worth buying.